Well, and that's part of this process is figuring out how each of these countries wants you to do the same thing. Where if it were just, collect some money, pay a bill, great. It's instead log into this system, log into that system, translate this to this currency. Nope, just this other currency, include this, don't include that. Follow this timeline unless it's the end of a year and it's a different timeline. Oh, and our tax year is different than your country's tax year. So you have to remember that too. And.
Welcome to another episode of the Zonos Decoding Cross-Border E-Commerce Podcast. And we've had conversations about low-value tax before, but today we want to talk about what are the risks and repercussions to not paying your taxes. There's 8 jurisdictions or so, plus that, and more coming, that you are supposed to, depending on thresholds, pay and remit tax directly to the government, even if you're in another country. So today we brought a special guest. Hannah, please introduce yourself and what you do at Zonos and how you ended up learning so much about some of the risks and ramifications of low-value tax.
Do we want the long version, the short version, the somewhere in between?
Oh, yeah, surprise us.
All right, so I am actually the Chief People Officer here at Zonos. So I own the HR function and I've taken over remittance, which sounds
made a lot of
little
sense when we did it.
incongruous at first, but to put a little context to it, prior to Zonos, I actually went to law school, worked in law firms, investment bank, legal departments, focusing on international law and compliance. So I do have a history in this, almost more so than I do in HR in some aspects. And a couple of years ago now, the opportunity arose to really dive in on this side of the business, and it felt like something that I could understand, could own. So now I work with our team to manage our filings and remittance across a variety of countries.
That sounds like a natural combination to put HR and international tax into one job description, don't you think?
Yes.
Absolutely.
I mean, we do love our rules. We love our compliance. We love our process. So it makes sense.
So Hannah, now you've been doing this, I wonder if you know the answer to this question. Why did the man who didn't pay his taxes become a baker in prison?
I don't know.
He was great at cooking the books.
Bam.
Ba-da-ba.
All right. Well, this is going to be fun today. I would love you to bring the joke. But we already had to have you prepare for a whole lot funner conversation than that.
It's kind of against
Aaron, where do we want to start here?
Well, I think let's recap. We've talked about all the different tax laws that are out there. Most of them have an obligation if you're going to sell into their country that at some point you are obligated to register. There is one exception to that. So let's talk about the easy one that you don't have to worry about, which is the EU, right? So IOS is an interesting one that is optional. So if you don't register for IOS, it can clear and clear customs duty and taxes assessed like it normally does upon import. There are extra fees and things involved. IOS has some advantages.
Extra fees if you're not using IOS.
Yep.
Because
the carriers get involved in moving the
going
tax
through the
money.
clearing.
Charge.
It's just happening through customs, not through you just paying directly.
Yep. So
okay.
IOS took the approach of a carrot. And they said, hey, let's put a carrot out there to give you some advantages to remitting taxes directly to us. And it actually has worked pretty well from what we've seen. But every other country really puts out the obligations and has more of a stick. And I think that's what we're going to talk about is the sticks that are out there.
Who has the biggest stick?
Well, I would say too, though, with the EU, they're not saying it's voluntary to pay your taxes.
No.
It's voluntary to participate in a specific scheme to pay.
Fair.
So that's a slight differentiation there, where everyone's still requiring it. They're just saying, here are a couple different ways to do so.
Yeah, and I think the advantage is, historically everything's been, if you go back enough years, everything was collected at customs by the broker, and then payment was facilitated at the time of import. And then the obligations started getting pushed off on the sellers that are located in other parts of the world. And most of them have the stick approach. EU said, hey, let's give a carrot. So seller, if you don't want to deal with it, that's fine, but here's some advantages to take part in this program.
Yep.
So what are some examples of a stick approach?
Let's talk about that. Who's got the biggest stick?
The biggest stick. I mean, the biggest stick for you as a merchant is going to be where your highest sales are internationally in the end. I would say we have a variety of countries because depending on the country, it gets super complex. There are thresholds to meet. There are different values that define a low value tax good, which would be in this category in the first place. Then you have different percentages of taxes. And then these things are changing year after year, month after month. You don't know when, you don't know how. So recently,
should we unpack those really like super high level? The main countries to look at.
We should at least go through the list of countries, right, where this is required or not or optional. And
so the main countries that we're talking about would be, well, countries and I guess regions would be the EU. The UK now post Brexit is its own standalone scheme. We've got Norway, Singapore, Australia, New Zealand. Korea does have a scheme there. We're seeing some others arise potentially in some other countries. You know, Canada does have that. The US, we don't have one, but we do have all of our complexities with sales tax state to states. We're basically looking at almost a 50 country scheme here as well, which is
right. If you're outside the US selling into the US.
Correct.
Yep.
So we've got, so if I'm a seller, I'm going to say, if I'm going into Australia, I don't have to worry about anything unless my sales of low value goods in Australia are over 75,000 Australian dollars in a year.
Correct.
New Zealand is if my low value sales in New Zealand are over 60,000 New Zealand dollars in a year. And we've got docs on our website. We've got other podcasts that go into more specifics, but so we're not going to unpack all of that here today. But I need to start worrying if my sales into those countries are reaching these thresholds. Singapore is 100,000 Singapore dollars.
But that's a lot.
That's a lot
of sales into Singapore.
Yeah.
So unless you're close to the region, have a lot of sales into Singapore, most merchants don't.
And this isn't all sales. This is low value B2C sales that you count towards.
Well, and Singapore even looks at your global sales as well as part of their calculation too. So it's even more complicated as far as tracking goes.
So really what it comes down to is as a seller, you're obligated to look at each one of these thresholds and understand your sales into those countries. So that way, when you do hit those thresholds, you do take care of the necessary steps to be compliant.
Correct.
The one interesting one is the UK. You can't sell any low value goods there. Like it starts at pound zero, and any low value shipment you're supposed to register and remit on, which is the only one that does that. So that affects all the even small sellers that are out there.
But registering is easy, right?
Define easy.
No. The UK, I think, is pretty terrible.
Yes.
Mm-hmm. Yeah, they've got the hardest process for registration out of any of them. And they've got the lowest threshold. So go figure.
Well, and that's part of this process is figuring out how each of these countries wants you to do the same thing. Where if it were just, collect some money, pay a bill, great. It's instead log into this system, log into that system, translate this to this currency. Nope, just this other currency. Include this, don't include that. Follow this timeline unless it's the end of a year and it's a different timeline. Oh, and our tax year is different than your country's tax year. So you have to remember that too. And.
Yeah, so I think it's understandable if some merchants just, especially if they've been selling internationally for a while, they're like, all these complexities are handled by my carrier and brokers that I don't have to worry about it. Even if I want to collect duty and tax at checkout, they'll just send me a bill and I'll pay it. I don't have to mess with any of this. But now these tax laws have pushed that burden back onto the seller. And now they're having to start becoming international tax compliance experts, which is probably pretty daunting for a lot of them. And then each country does its own thing, has its own set of rules, its own nuances, and complying with those has got to be intimidating and difficult for many merchants. So some of them, I imagine, are taking this step of like, I'm just going to stick with the old school way. I don't want to mess with this. I'm just going to fly under the radar, and I figure nothing's going to happen to me.
You're in another country. Right? How are they going to find you?
Yeah, how's Singapore going to come after me over here, right? How does that work? So if someone decides to take that route of just saying, I'm just going to keep shipping, and I don't want to deal with these laws, what happens?
You can do that. Depends on your appetite for risk and how much money you have in the bank to pay the eventual bill that's going to hit is. I think with the reason that these schemes have been increasing across a number of countries, the reason that the thresholds are going down, the reason that there is more and more attention is because countries care more and more and more about this lost revenue. And they're looking for ways to find it. And it is coming into their country across a border that is watched, that is paid attention to. It's relatively easy to figure out who's shipping in. And when they do, there are going to be a lot of questions. And sure, you might not get dinged for a year, for 2 years, for 3 years. That means that your bill has now increased 1 year, 2 years, 3 years.
So if you're not collecting that from the shopper, you're taking
Correct.
that out.
And that's a big distinction, is that if you are compliant, if you are calculating, you are collecting at checkout, which is the easiest place to do it, you have the money. And you have the money when the bill comes due to pay it. If you don't do that, you could potentially be looking at hundreds of thousands of dollars, pounds, whatever the currency is, that you now owe, plus interest, plus penalties. So the bill is even higher than you think it's going to be. And that can be extremely detrimental to, in particular, small business that maybe had some great years selling into Australia, and now they're facing a huge bill. So like with the UK example, post-Brexit, one item, you're over. So a lot of merchants were thinking, oh, I have a grace period. This doesn't apply to me. It applied to you. It applied to everybody. And there were some hard hits taken following that. And it is so much easier to comply as quickly as you realize you need to comply.
Well, it seems like in the UK, it'd be really quick to figure out who's not compliant.
Yep.
Is there a tax ID on here, right? Whereas the other ones, there's some thresholds that are applying. Mm-hmm. So, you know, it's trying to monitor that volume and that threshold, which, you know, they're doing.
Right.
But it does seem like in the UK, you're not going to get away with it for very long.
But I think the practical experience most people are having is no one's coming after them right now. Because I imagine these countries, not imagine, they're focusing on the biggest offenders first.
Well, the big offenders are very, they became compliant quick because they know how expensive this is going to be. And you think nobody's
I think
going after anybody?
they're naturally going after
Right.
the bigger offenders.
Yes, correct,
first.
correct.
So all the small sellers are probably getting away with it just fine.
Mm-hmm.
But for how long?
For now.
Who knows? And to your point, Hannah, they like their tax money. They're going to be coming after this lost revenue, and as long as it justifies their resources to go after it, they're going to be.
So the risk is they might start stopping that package, mm-hmm. penalties, which could be interest. Do you have any idea on some of those penalties and what they can range from?
I mean, we've seen some pretty significant. We've seen companies banned from importing into certain countries after having been non-compliant for so long, and then ignoring warnings and things like that until you settle certain bills. There's thousands of dollars, hundreds of thousands of dollars. Like, even when we're managing accounts, and if a merchant were to come in and have a balance owed, like we take on kind of the fight with the ATO or with the tax entity in the country.
ATO
and work with
is like
them,
the Australian
tax
Yep.
entity. And it takes months to work with them. A lot of patience, a lot of back and forth, broken systems, things like that. But we are able to kind of help negotiate and help soften the blow from some historical misses, intentional or not. But I think the biggest thing is getting back to zero as quickly as possible.
So if I think you might have answered my question, but if they came to me as a seller with $100,000 bill and I said, pound sand, you're in another country, you're not getting that from me. Mm-hmm. The repercussion of that is they'll just start blacklisting me and not allowing my packages to go in. So basically, if I want to be able to sell into that country, I've got to pay that bill. Yep. Is that how that works?
That is absolutely a realistic potential effect. And I mean, in the end too, you are selling to a person, most likely in this country, who wants to be receiving the order that they put in. And so the reputational risk alone, even if we're not talking about the dollars out of your pocket, is serious and is significant. And if people start to kind of not trust you as a merchant to order from, where I'm not going to get my package, or I am going to get a surprise bill at the end, or there are going to be huge delays, they're not going to work with you. And that alone will have potentially an even greater effect on your business than just having paid that bill up front. And again, you can collect this money. This isn't us saying you have to find the money. It's just collect the money and then pay it, which your customer is most likely expecting to do at some point.
Now, you collect the money, you pay the money. Talk to us a little bit about the payment. What's the process like? What are the systems like? What is the, what's easy about it? What's not easy about it?
There are a lot of spreadsheets and there are a lot of logins. And we'll take Australia, for instance, where they have a system that you log into, but you have to have a specific program downloaded onto your specific computer. So I can't do this from any other computer except for my one single laptop.
Are they worried someone's going to pay them taxes? That
honestly, sometimes it seems like they are.
It's like make it as hard as possible to give them the money.
Yes. And around every quarter, which is when their taxes, then the remittance is due, their system crashes, and so we can't get in. But you have to have a specific login to get in a specific website that they sometimes claim they don't know exists, but they will charge you interest and they will charge you penalties if you don't pay this bill that you can't get into view. And meanwhile, you have to go through either a month, a quarter, some defined amount of time that differs per country. Figure out all of your orders, everything you collected, what you owe, make sure it all matches, go through currency conversion, get them their money, which can be sometimes a credit card, sometimes a wire payment, sometimes something else. You never know what the payment system's going to look like. Singapore actually has 2 apps, and you need 2 separate people in order to get your return filed. So this is why we have entire teams dedicated to this.
You have to have 2 separate people? Like, is this,
yes.
So this like nuclear weapon stuff,
yes.
like the movies?
Yes. We each have a key
yes.
because we each had to give the Singapore government our passport information in order to get access to an app. So one person has to enter the information. The other person has to approve the information. And meanwhile, you have other deadlines.
What if you're a one-employee company,
Well, I hope you don't have a whole lot else to do.
Well, I guess in Singapore, though, it's really only the big shippers that hit the threshold.
I'm going to build a big company by myself.
Okay.
And I think that's the thing, is that everybody wants to be the big shipper. You want to do a lot of business in these countries. You want to see things increase. You don't want to get close to the max or get to close to the threshold and say, let's tone it back a bit here.
That was kind of where I was going with this too, is if they're coming after you, if you've been non-compliant,
yep,
that means you're selling a lot in that country. That means it's a really relevant part of your business. And if you're so non-compliant that they're going to be coming after you, all the tax revenue you owe actually represents sales from your business. That's a lot of revenue for your business. And you're putting that at risk by not being compliant.
Exactly. And I think that's the key here, is that the better things are going, the higher your risk, the more serious ramifications of not complying, which when you hit an easy button to get compliant, like using Zonos, for instance, you can just worry about your sales and just see that number go up.
Well, yeah, let's talk a little bit about the options that are out there, because I honestly I think most businesses are very honest, and they're not intentionally trying to be evasive of these tax laws. I think a lot of it just comes down to maybe being naive about it, or just not knowing what they're supposed to do, and might be non-compliant without even realizing it. So let's say someone recognizes, oh crap, I have been non-compliant for the last 2 years going into this country. But I wish I was, but what should I do? What are the best options for them?
So I think you're right, where this is not necessarily, the vast majority of people think they're compliant, following the rules. It's a lot to keep track of. Naivety, ignorance, not a defense when it comes to tax law. So it kind of is what it is. And I would say we have that conversation and call us, because we're really able to help look at historical sales, say, okay, what have you been doing? What is the volume? What is the threshold? What are the types of goods going in? Who's buying your product? And for how long has this been going? It might be a super easy solution of, actually, if you even out the averages, you're trending in that direction, but you're pretty good. We can just get you started remitting, filing today. There may be some where it's, we can talk to the tax authority on your behalf. We can do so and just say, hey, here's a situation. Here's what we're looking at. What can we do to work with this merchant because they want to be compliant? And that end of the sentence is really the key there, where if you are demonstrating the desire to give them money that you need to be giving them, and the desire to continue to sell into their country, to continue to make revenue for them, and do so in a compliant manner, they're going to be willing to work with you. If it goes the other direction and they call you and say, hey, kind of seems like you've been selling a lot into Australia for the past 10 years and what's going on here, they're probably not going to be as willing to work with you.
No, that makes sense. I think you see that trend a lot with a lot of different.
So you can either essentially disclose, right, and try to fix it, or you can, which you should do anyway. But also, you're not prevented from selling, like on Amazon, for instance, right? You could still sell on Amazon because it's under their tax ID. Or in our case, we have the seller of record service where we can just we're not dealing with your tax ID. We're just dealing with our own. So if we come in, we're going to start just acting on their behalf.
Right. And I think that's the distinction there is you have kind of three types of merchants. One is the merchant who has their own tax ID in all these countries, has been selling high volumes. They start to work with Zonos. We take over that entire process. We take over all their filing, all their remittance under their tax ID. That's one way. The second is someone who's saying, we've been doing these volumes. We don't understand the compliance, the complexity. We don't have time for this. We can help kind of look at what's been going on, figure out, okay, does it make sense because of what you're trying to accomplish as a business to register you on your own and maybe deal with some historic information, but most likely just move ahead from there? Or C, are you taking an approach where you want to scale quickly, add countries, not worry about this, just sell your product to people who want to buy it and forget the rest? That's where seller of record can come in. And it ends up being under our tax ID, which is the easiest way to do it. You don't have to maintain your own registration. You don't have to complete your own registration. You don't have to touch anything. We will calculate, collect, file, remit, everything on your behalf and ensure that it is compliant year to year, month to month, quarter to quarter. And so I'd say that third option is great if you just want the easy button. You want to get it done. You just want to worry about creating products, selling them.
Yeah, that's where, if I look at there's a few different ways to approach it. The marketplaces, and a lot of these laws were written for the marketplaces, targeting them, right? So the marketplace.
Well, I would say they were written due to the marketplace.
Yes.
Not for them.
Yes. So the marketplace, you could sell your product on Amazon, on eBay, there's a million marketplaces out there, and they'll take care of all this for you because they're the ones truly transacting and selling your goods to the buyer. And now it's their responsibility and it's their tax ID, et cetera. The downside to that is they're in control of putting it out there to your customers. And then on top of that, you lose margin to them. But marketplaces are a very viable option. A lot of goods are sold there. You don't have the compliance risk that's shifted over to the marketplace. If you want to sell direct and own that customer experience, you can do it yourself. And you have to manage all these different tax laws and all the nuances of them, and that's growing. And you can do it yourself. Totally viable route. That's what these countries expect you to do. But each country is looking at it as like, hey, just to comply with our law. It's just this law. That's it. What they don't understand is You're sitting there having to deal with lots of different laws that are written in different ways. But you get to control the experience. You get to control your margins, and overall create the experience that you want for your customers, and you get to interact directly with them. But it sounds like the seller of record model is saying, okay, take that, but now let's shift the compliance of all the tax and stuff over to a third party like Zonos. And that's where they can focus on selling to their customers and creating that brand and that experience they want, but all these complexities can be offloaded to a third party. Is that a fair assumption of everything?
Absolutely. And I think it's important to say you can do both. You can sell on Amazon and you can use the seller of record model. where, yes, you are still owning that customer experience. You're not owning the complexities of figuring out tax laws in every country that you sell to. So it really does kind of reserve that time, that energy, that space for your own business.
Makes sense.
What else is on your mind, Hannah? Anything else that you were really hoping to get to on risk and compliance when it comes to low value tax?
Could go on for days. I think one thing is there are kind of the two halves to the coin when it comes to this. So there's the effect that this would have on your customers, potentially the people buying your products. And then there's you as a company. And one thing I also think about is, as with any other regulation, compliance, law, sure, I could not follow any of them. But if someone asks, if I'm asked to sign a contract, an agreement, perhaps I'm being acquired, something like that, and someone says, hey, are you as a business compliant everywhere you're selling? Are you as a business compliant with international tax laws, regulations, or just laws and regulations? I want to be able to say yes. And I don't want to say, well, here's the thing. We do have this potential liability in a few countries, but we think we're good there. Like, that is just not the answer that I think anybody wants to have to that question. It's so much easier to say, yes, like we work with a company like Zonos and we sell on Amazon and we are fully compliant. We don't have to think about this cash. It is collected. It is remitted on our behalf. All we think about is sales, and here are our sales numbers.
Just to double click on that. So of the parallel for a lot of the listeners, they're in the United States and they have this same, as you think about being compliant with intrastate tax, this is the exact same principles outside the US. When you think about a VDA, which is a voluntary disclosure, it's very similar to, Australia, hey, we need to now start remitting and paying. So be thinking of these other countries like an extension of the US sales tax law. And I think it'll make more sense to the US sellers like, oh, yeah, if an acquirer did come in, or if I am being audited, these things are going to come up.
Absolutely.
And I think it's probably good to hit home on the U.S. sales tax stuff. It is not just an interstate sales tax law. Nexus and everything else was built for anybody outside of that state. They have their own selling thresholds that apply to anybody anywhere in the world selling into their state. It's not just interstate commerce. And so this means if you're in Australia, the UK, Europe, somewhere else in the world selling lots of volume into the US, you need to be paying attention not to one, not to two, but to 50 different selling thresholds and make sure that your sales into the US are compliant with tax remittance and all the sales tax we have here. I think that's a point that gets missed. That's something I overlooked for a long time. Because all the conversations when that law came out was about the sales from one state to another, because that was the bulk of it. But it actually was written to apply to anybody in the world selling into the U.S. as well.
That's a lot of reason customers outside the U.S. come to us is to help with the U.S. sales tax. So,
well, and I think too, finally, this is all a topic of conversation because it is getting harder to keep track of. And more countries are doing this. It's becoming, a quote unquote easy way to track down some missing revenue. And those who already are working with these are lowering thresholds, are increasing tax percentages. Other countries are looking at this, like Japan and India sounds like pretty likely to start implementing something. This is a constantly evolving, and I don't think it's going to get easier.
Is it? Yeah, if we're taking bets, I think we're all...
It will get easier for the countries to get their tax money.
That is true.
They're loving it. Mm-hmm. Yeah. Well, hey, this has been another great episode of the Decoding Cross-Border E-Commerce podcast. Hannah, thanks for coming on. This has been great.
Thank you.